Sorry, I just want to make sure my recording is on. All right. All right. So the fundamentals of the attorney audit. What does the auditor look at? Why is there an audit? What do they need to determine from your set of books? And firstly, it's to make sure that your whole practice, the legal practitioner's trust accounts specifically, is in line and in correlation with the legal practice practitioner, the act and the rules of the LPC. They need to look at the rules, and they need to make sure that your set of books does comply to that set of rules that is given to the industry. All right. By doing so, obviously, you guys will know that at the end of the audit, they will sign it off, and you're going to reapply for your Fidelity Fund certificate, which without, obviously, you cannot practice as a legal practitioner, or that firm can't practice as a legal practitioner. All right. So the responsibilities, obviously, that is there for the legal practitioner, and their responsibilities are quite few. There's a lot of them, but luckily for the system, and luckily for bookkeepers and day-to-day scrutiny of your bank statements, all of these fundamentals or responsibilities will be met at the end of the day. All right. So I'm not going to read from the slide. It's placed in points for you to look at later on if you want to. So I'm just gonna talk, and if there's anything on the slide that I do miss, I will just check. But mostly my conversation will flow directly from the slides. All right. Now the first responsibility of the legal practitioner is that the set of financial records must be written up monthly. In the past, it was 60 days. There was a 2-month period, but the new regulations of the LPC placed it now on a 30-day or monthly responsibility. So the whole idea behind that is to make sure that the books are kept in a more frequent updating order, especially to protect the legal practitioner at the end of the day, to make sure that if there is a 2-month period that I haven't done anything, it's so difficult to figure out where the problems is. And even if that 2-month period falls over a financial year end, it's always difficult to catch up and to make sure your books or your set of records are updated. So the 30-day limit is there, and you need to write everything up monthly as the regulations say. Now, it includes the section 86(2) normal trust accounts, and obviously the section 3 or subsection 3 and 4 of your investment accounts as well. A lot of people will phone me and ask me, especially regarding the estate money that the practitioners will keep in a separate estate banking account. The moment you keep estate money separate from your section 86(2) trust money, it does not fall within the same scrutiny, obviously, but it does form part of your audit. So besides the fact that you've got the estate banking accounts, and usually the money doesn't go in and out there a lot of a high frequency, you still need to write that up monthly. So by using a separate Excel or a separate program for your estate banking accounts, that's fine. The moment you start processing your estate banking accounts in Lexpro, so the moment you open up a cash book or a second bank basically, and start opening the files and processing them on Lexpro, they will form part of the 86(2). So it is, you can use it, but it's not part of your banking accounts. So your surpluses and your reconciliations will be a bit off because it's not part of the 86(2). We do have separate software for estate banking accounts specifically, but you can also use Excel or any other program that you want to use. All right. So the main thing that people tend to slip up with, although there was a directive issued last year, May, about that stipulated that the attorneys or the legal practitioners' business bank accounts, or the business side of your records, that doesn't have to go through the audit. That's fine. But the fact that you use your business account for disbursements on behalf of a client, those transactions need to be captured on the system as well. We can't just leave the business account out of it. So if there's movement in the attorney's or the practice's own money, so basically the business account, that needs to be written up as well. Okay. Now, by writing up your books, by processing from the bank statement into the system, that's your first responsibility, and that should be done monthly. The second responsibility that flows from those transactions is to make sure that we do reconcile those transactions on a monthly basis as well. Now, the guidelines and the rules and the Act doesn't stipulate the reconciliation. It just says written up, but it should balance, and that basically refers to a reconciliation that you need to do. Lexpro, you can find the reconciliation under the cash book menu, as most of you would know. We will see there's a trust and a business reconciliation, but obviously we're referring to the trust one here. And there's an option that says mark no's and yeses. Now, the simple terminology is just that no items, meaning I have not reconciled them, and yes items, yes, I have reconciled them on my cash book. All right, there's a screenshot of where you can find that specific function. And that's just how the function will look. Now, the problems that we do get as a consultant from clients is that there is always a reconciliation done for today, which is fine. I'm writing up my books on the 10th of February, 3 o'clock this afternoon. I go into the reconciliation function. I reconcile up until the 10th of February. Nothing wrong with that. The cautious, where you need to tread very safely, is on a month end date specifically. Now, everybody knows that when an auditor comes in, he will ask for a reconciliation, maybe for 2 or 3 different dates that he decides on, and then obviously a 28th of Feb financial year end reconciliation. All right. Sorry, I see chat. Sorry, my apologies. Okay, I will look at that chat just now. Ariela, sorry about that. I will check that chat just now. All right. Now, if you look at the trust reconciliation screen, and specifically the ending date. So when I'm approaching a month end period, and today is, for argument's sake, the 30th or the 31st, I can process my transactions today. I can do this reconciliation for today. But always at night, there's bank charges or interest or money that people paid in this morning and only clearing in the afternoon or late at night. So when you look at your month-end reconciliation, we always go the next day and we do a reconciliation for yesterday. So we need to be past that specific date, because then we can trust the bank statements of all the transactions on it for the 31st. And I can see if there's anything new, especially bank charges and interest, and then I will allocate them again and I will present, or I will do a reconciliation. So the ending date on this specific screen is designed to allow you to backdate your reconciliation. So for the reconciliation for the 31st of January, I will be able to do that on today, because I can put in an ending date, which is the 31st January or even December. All right. Now, when you view the reconciliation, the items that is presented there on the screen is the non-reconciled items. You will see it there in the bank column, where there's an N1 next to every item. It's just indicating to me not reconciled. It's not been marked as a yes by the user. And the transactions that you see there are the ones that I need to compare with my bank statement. All right, so the bank statement will have them on, and I need to click them there on the left-hand side. There's a tick box. I will select them, and I will indicate to the system at the top to mark the selected as yes, because I can see it. And then I'll put in my bank statement balance that I see on my bank statement, click on the recon button, and you should be presented with a reconciliation that says correct, with a green 0 there. If a reconciliation like this says correct with a 0, but you can see there's outstanding items, meaning there's items on my cash book that I could not find on my bank statement, Those items need to be addressed. I need to check why there is an outstanding item, and I need to make sure I rectify it. It can be a duplicate transaction, or it can be an incorrect date or posting or something of human error that I need to address. The reason why I'm saying this is when you look at your figures, when you look at a trial balance and you look at the cash book figure that the system presents you there includes any item on the cash book. So if I've posted 2 receipts in the value of 1 million rand each incorrectly, the reconciliation will tell me there's 2 items I can't find. The system will deal with that outstanding items on the reconciliation to indicate to you if you are still balancing or not. But those 2 receipts increase my cash book value, which is incorrect. So I see an inflated value on my cash book. So we don't want to present ourselves with balances on trial balances or figures on trial balances that is inflated by incorrect transactions. All right. I do have clients who will process your bank statement and everything, and they will not mark any of them yes, and they will simply put in the balance. The system will present them with an incorrect balance, but then they will just check if the values are the same. That is not how you should be able to use this reconciliation function, because if this first responsibility, this first function is not a clean recon, meaning no outstanding items or anything like that, the audit trifecta, the rest of the triangle will fall away, and then we will sit with problems, and it's so difficult to figure out why and to explain why, etc., etc. Okay. So your consultant is on speed dial if you want to let them have a look at the recon, because now we're approaching the 29th or the 28th of Feb, and we need to make sure that those recons are correct, especially on the year end. Okay. Furthermore, the trust creditors figure or value needs to be in line and correlates with the cash book value. All right. So cash book value is your bank statement that you're basically inserting into the system. Creditors value is all the clients that you keep money for in a Section 86(2) banking account. Forget about the investments, forget about the estates. It's the running balance of your bank statement and the creditors that are linked to those money that's in your bank. Okay. Now, a creditor on the system can get a balance by way of a receipt or a payment. So money coming in or out of my trust will affect the balance of the creditor. But journals between one file and another file will also affect the balance. So I can have a suspense account, or the client can have 2 or 3 different files paid into one, ask me to move it to another account. Those journals between them, especially on trust, will change the creditors' values to all right throughout the firm's data. So forget about the bank statement now. Let's look at the creditors versus the cash book. So I know my cash book value is correct because I've got a reconciliation that's correct. So the creditors and the cash book, they are confirmed and correlate. And the system does that for you automatically. So you don't have to do that manually. It's an automatic reflection of what's going on. And that report is the short trial balance. I'm pretty sure all of you have met the short trial balance. So the short trial balance, sorry, I just want to admit another person there. The short trial balance is like a bird's eye view. It's a live version of what's going on. So if I'm doing my bank statements and I'm doing my reconciliation, I go into my short trial balance to see what's going on. So the short trial balance you can find under the balances menu. There's a short one, a business one, and a full one. You just view the short one. And this is how it will look. So you will see that there is a creditors line and a cash book line. So they are subtracted from one another, and we are left with the surplus value that you see there, which is 0. Never, ever should we see a shortage. We do not want to see a shortage value on this short trial balance. And now you can see the problems that we are dealing with if we have a reconciliation with outstanding items. It inflates the cash book, or it's inflating your creditors, and we can sit with a short trial balance where we might not be able to trust the values because the first part of my process is not 100% clean. Okay, so if you are seeing a shortage there, please get your consultant on the line so that we can try and figure out that shortage before the 28th of Feb. Because if there is a real shortage where I have paid money out of the file, where I did not have the funds, or something went wrong with an investment, we need to address that now. So we can still pay money into the trust account to rectify, or we can make sure that we guide you into the right line of work, or fixing it to make sure that you don't have a short trial balance that is reflecting a shortage. Okay, so this is basically the second part of my triangle that I'm trying to build. So the first one is a reconciliation between the bank statement and the cash book, and the second one is your surplus or shortage figure, or your calculation between the creditors and the cash book. Okay, right. Some pointers about the short trial balance. People tend to ask us, can we view the short trial balance for last year? No, you can't. The short trial balance doesn't have a date specific. It's to present you, especially with a, like I say, bird's eye view of your current live status. So if you want to keep a short trial balance for historic reasons, you need to put that short trial balance into the PDF option that there is. Save it or print it and keep it in a file or electronically to make sure that you have that to jump back on and to view if you want to do that. But there is a full trial balance version with a date option, so it's not a necessity to put this into a PDF. You can view your full trial balance with a date option. The full trial balance just gives every single balance that you see there as a list of files. So it's a bigger and bulkier. The auditors also ask for the full trial balance, obviously, but you can present them. But the short trial balance is nice to just keep your finger on the pulse. Okay, so just a point of advice, basically. If you are approaching a month-end date, and you are processing your transactions and you're viewing your short trial balance, and you want to print the short trial balance as per the 31st of a month or the 30th. You obviously have to wait till the next day to make sure your bank statements are all finalized, and then you print that short trial balance. Unfortunately, the moment you start processing any new transactions in the new month, the short trial balance will capture them and absorb them, and you will not sit with pure figures for a month end. So just bear that in mind if you want to view the short trial balance backwards on a PDF. All right, now the short trial balance, the creditors balance, it excludes the section 86.3 and 86.4 investments, and the reason for that is because we remove the money from the cash book, we transfer it to an investment bank. It's excluded from the cash book figure because it's out, and we exclude them from the creditors because it's not part of that specific creditors responsibility balance, if I can say it like that. So because the way we on Lexpro process your investments, that's why we remove it from the creditors and the cash book on the short trial balance specifically. And that's why the auditors obviously ask for your list of your investments and the interest and all of that, because it's removed from your section 86.2, falls under the 3 and 4 guidelines, and that's why we keep it separate. So that the auditors need to audit them separate and look at the figures separately from the active 86.2 balances. All right. Okay, so up to this point, the software assists you with the reconciliation, so the bank statement comparison with the cash book. It gives you the trial balances to compare creditors and your cash book for viewing of your surplus or shortage figure live. So the next part is the manual exercise, basically, that the legal practitioner or the bookkeeper needs to do. So there is no report for that. And that's the correlation between the creditors and the bank statement. So we need to ask the bank, give me the total on a specific date. We take that total and we compare it with the creditor's balance on the same date. So typically, finalizing month end, 1st, 2nd, 3rd of March doesn't really matter. I view my bank statement, the balance, I go to my short trial balance and I check the creditor's balance and I compare them. So people will say, okay, but if the reconciliation has got now it's no outstanding items, then the cash book balance should be the bank balance. Yes, that is the case. So that is why this last part is the final of the triangle. Because if I've made an error somewhere, the last part will show it to me specifically. It will show me, listen, there's something not correct with the balances that you are trying to pull together. And the screenshot of the trifecta will maybe explain it in a bit more detail. All right. Yeah, like I said, there's no report, a simple comparison in the office. So you just view the bank balance and the full trial balance on the same date. And like I said then, if you've got a correct reconciliation and a zero surplus, your comparison that you're going to do will be exactly the same. So the balances will correlate and be the same. All right, so there's the audit trifecta, the triangle that I'm trying to build up to and explaining to you. All right. Now, if you look at the triangle, you put the cash book on one of them, you put the creditors on one of them, and you put the bank balance on one of them. So if you've got a cash book creditor relationship there, that's your surplus or shortage, which the trial balance will show. If you've got a cash book and your bank statement line, that's your reconciliation, and that's what we've done. And then the bottom one is the creditors and the bank statement. So at any point in time, if any of those lines should break, if I can put it like that, if there's an incorrect recon, maybe it's not balancing and I don't know why, or there is a shortage or a surplus figure, you will get the exact same error on one of the other parts of this trifecta, depending on which way you calculate them. So the one side will always have an error the same as the other one. And that is basically what we as a legal practitioner need to make sure, that this thing does not fall into pieces. We need to make sure it stays in a perfect triangle and everything balances with one another, obviously. Okay. Yeah, if any of the sides doesn't correlate, I will have an error, and that one of the functions or reporting will show you where that error is. All right. Some miscellaneous information regarding the webinar, basically. It's the advisory notice that I spoke about, where the business account doesn't need to have an audit, and it includes your incorporated companies as well. But like I said, that does not mean that you can fall away from your business accounts. We need to make sure, according to the LPC's Act and rules, that the moment I'm using my business account for money on behalf of a client, expenses, couriers, sheriffs, whatever the case may be, we need to process that, and that needs to be part of the transactions, because that forms part of the creditor's balance at the end of the day, where a transfer journal or money was transferred from trust to business. So we need to make sure that we do process that as well. All right. There's a questionnaire that the auditors usually ask the legal practitioners before they finish their audit, and it's regarding the system that they do use. Now, the two questions is backups and password security. So basically, if you are confronted with those two questions in your audit, you can honestly say backups. Yes, Lexpro does make backups every night on our service, and we keep a copy locally and in the cloud. And the attorneys via the program, or the bookkeepers, or whoever's got access to the accounting software, can download that backup on a daily basis as well. And then the password security, everything is encrypted. So your password that you log in with is encrypted. We can't see it. You need to give us that password if we want to be able to log in with your user. All our access on our servers are all encrypted. So we do jump through all the security hoops that is necessary to keep your data safe. The resources, you're more than welcome to look at these websites, the LPC's website directly for rules and regulations, as well as there's 2 Google Drives that is on by the legal practitioner. I think the council, they loaded the information there on those 2 Google Drives. It's basically the Act and the regulations and everything in PDF format. So you can download it there and read through it if you want to. And on our website as well, we've got a resources tab where you can go and you can find resources, government gazettes, advisories, anything that we gather, we put on our resources as well for you to use. All right, now there's the consultant details. I think you guys will all be familiar with where your consultants, you can find your consultants, etc. There's a menu item at the top if you don't know who it is. Otherwise, you're more than welcome to email info@, Lexpro to get the information. So in conclusion, basically, on a daily basis, scrutinize yourself. Be particular about what you do. Don't process anything that you don't really know what the impact will be, especially when it comes to journals. Journals, there's a reason why the auditors will ask for the set of journals that's being done during a financial year, because people tend to process a journal which they think should be done in that way or manner, but then back at the ranch, it should not be done like that, or there's a different way in resolving it, especially fixing transactions where you've got an error on the cash book or the recon and you want to remove it or you want to reverse it, and then journals are being processed. So if you are flustered or anything like that regarding a transaction or how to fix it, ask your consultant, email. They will give you the best advice on how to make sure your set of records stays correct and within the guidelines. All right. I hope to see you at the next webinar.